Hello, everybody. Jim Malone. Well, happy Friday to everyone here. Thanks for dropping by, taking a look at my little show. Um, the market is been punishing some tech stocks as of late. It's just, yeah. So actually, if you look right now, we have moved from a confirmed uptrend to an uptrend under pressure. So what does that mean? Well, what that means is that basically we're going to have to start going to cash once again. And we were in cash, and I just got the signal just right before the show, literally right before the show, that the market direction has changed. We've gone from a confirmed uptrend to an uptrend under pressure. And what that means is we want to start getting out of cash, and we want to start looking at some opportunities. I was fairly light to begin with. I was trying to come back into the market, but with what's going on, that's not going to be the case. So the market direction has changed to a uptrend under pressure. So this is a very key indicator in that we're going to have to start getting light again. It doesn't look like Santa Claus got lost in the woods, and he's not going to be delivering those toys. So under pressure, and we're going to have to kind of get a little bit more defensive. Basically, this is what's happening with the with the markets today. We've got we've got the Dow down, we've got the S&P down, we've got the Nasdaq down slightly. It didn't recover a little bit, but it's down as well. And it's just a tough market to trade. I mean, it really is quite difficult. Let me see if I can move my monitor. Well, I can. I don't know if I can do that. Probably not a good idea to do that, because I probably will mess something up. But anyways, the stock market is basically pulling back, and we're back where we started from. Just wanted to show you this high-low indicator. This is kind of a cool indicator, and what it indicates is this is the number of stocks that have made a new high to the stocks that have made a new low. Now, this typically indicates where there's going to be a change in the overall direction of the market. We are still in a bull market, but it appears by the high-low indicator that this may be changing. So this is sort of a topping signal. It is psychological, but it's a very important signal, and it definitely is pointing towards potentially a pullback in the market. So I'm trading very light. I've got most of my positions are in cash, and then I'm starting to put bear trades on, and I'm going to show you a great one that I'm going to be doing that I just did today. It's on Square, which used to be, well, I guess it's called Block now. Block, Square, I don't know. But anyways, I have a bear trade on it, and I'll show you why I did that one, and that's going to be available out there. By the way, if you want to take a look at this trade, a direct link, I have put up a direct link here, and this is the Square bear puts trade. Basically, just go to bit.ly/DTF, that's Dallas Trading Floor, 0015, and to take a look at that trade. So it's a pretty interesting trade, and you might be able to make some money on it. So without further ado, I want to show you some of the option plays that I'm in currently. I did put out a bull call spread on CarMax, but I canceled that because of the condition of the market. We just didn't put it out there. So I have three option plays that I'm currently in. Just kind of want to show you the progress on them. The first is a Citicorp bear put spread, and Citi dropped a little bit today, and so the value of the spread went up. So it's looking good. This one's looking good. As Citi is moving lower, this one actually may be moving higher, and this is one of the spread trades that we put out there. I also have this is the only bull trade I have. This is a bull call spread on Life Storage. This is one of the few areas right now in the market that is getting the love, and that, of course, is the storage area. The storage REITs are doing very well. Life Storage is one of the best of these, and I do have this trade on it. Now, I don't own the underlying shares. What I do is I have a call spread on this, and it's doing very well. The value on this, as of today, it's gone from 141 to 145. Of course, we control 100. We control 100 shares per contract that we're trading. So this is kind of a very good one as well. I did put that out a few days, and this is the sort of how it's trading right now. This is when I entered today. It's on Square, which used to be called which, well, it's square, but now it's called block. I can't figure it out. We entered it basically at it did pop up a little bit today. It was 166, and then it closed at 167. I do expect to see some pressure on this trade. I do expect to see some pressure on the price of Square. I kind of wanted to show you the daily chart here. The daily chart on it, so it kind of gives you an idea of kind of what it's going through. And as you can see, it's moving down, dive. Now it did pop up a little bit today, but I fully expect it to move down again because it's relative strength of 14, and things just aren't looking as good as they were. Now, typically, stocks sometimes that are great to short typically are stocks that have been highly touted before and that aren't doing quite as well. So hopefully this one will work out, and we'll see kind of how this one trades. I just want to show you the stock of the day. Now, this is the IBD stock of the day. Don't necessarily recommend it in this market. It's just very hard to buy anything in this market. But this is West Chemical. I have actually traded this one before, West Pharmaceutical. It is looking very good, and it isn't in a very defensive area. The pharma area is doing better than most areas. There's been a flight to defensive stocks. Many of the people that are in the hedge funds and the funds, they're looking to finish out their year. They have got to be invested. So they've been selling the techs, and they've been buying some of the safety stocks like the consumer pharma. It's like the consumer staples, which I will talk to you about that one in just a second. But they've also been selling. Let's see if I have that one up there. They've been selling the techs and buying consumer staples and all the really safety stocks, that kind of thing. So this might fall into that sort of scenario. So basically, I kind of want to show you this trade that I entered in today. This is a bear put spread on the stock used to be called Square, and I kind of want to go through it with you, sort of how I set my stop losses, the whole thing. So basically, I got in. This is the actual numbers that I have today. I basically entered the trade by buying a January 21st put, a 175 put, and then simultaneously selling the January 21st 165 put. So with the combined price there, the out-of-pocket expense, the cash expense was 5.40. That was the net, and if you multiply that times 100, you're going to get $540. So that's the cost of the trade here. And that's where it says entry cost $540. Now, the maximum risk on this, of course, is $540. Why? Because, well, that's just kind of how it stacks up. The maximum calculated return is about $460. So hopefully, if Square falls below 165 by the expiry date, which is January 21st, 2022, then we will make a profit of $460, which is basically, during the period of time, would be an 85.2% return, which is very, very nice. And there's a probability of this happening about 54%. So very nice. I think this is a very good trade. This is how it started out today. I calculated the value of the heat map when it started out today at 166. The stock did pull up a little bit, but we're still positive in the trade right out of the box. So that's looking very nice. This kind of gives you a risk profile here. Now, I did set a stop loss on this, and the way I did it, and you can read through this, of course, if you want to at a later date. Let me kind of put up the the direct link there. Basically, what this is a risk profile, and so if the stock maintains a price that's below 165, you can see that's where we're in the money. And of course, if it moves above, that's where we're not. But we did set a stop loss. So if we are in a position where it's going to cost 50% more than we put out, or 810 to close this, we will automatically close the trade. So you can take a look at this in more detail by going to to that link. And let me just put that link back up here on the screen. There it is. All right. If you're looking on on TikTok, I can't display, unfortunately, these slides on TikTok. It's a technical thing, but I am right now simulcasting on YouTube. So super easy to take a look at this square bear put spread. All you have to do is go to my profile, click on the link, and then you will see it. And you just push the button, and you'll be able to see the slide deck that shows you sort of how this trade works. So without further ado, I always say that, without further ado, get into some of the slides. So thank you for waiting, everybody. Let's see. Take a question from TikTok first. Let's see. Okay. 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 Oh, wait. Somebody called me. Don't necessarily want to take that call. Let's see now. We're going to TikTok Live. Thank you very much that you're notifying us that we are live. What do you think of NVIDIA and Affirm? So let's take a look at NVIDIA. It's a good stock, but right now it is not at a place that I think we can really buy it right now. That is the issue with NVIDIA right now. We have, it pulled back, and unfortunately it pulled up to the reversal line, and then boom, it pulled back down. So it does seem to be getting some support at the 40-day line, but right now I just don't think we can buy it based on this market condition. We do have an excellent checklist. The industry and the sector and everything is a great stock, but the problem right now is that the market direction just is not going to allow us to, it's not going to allow us really to buy anything. So, with the market in a uptrend under pressure, it is, it is not the time to be long. Cash or short is preferred. So, really kind of thing, and I don't know, you may or may not be able to go cash or short. So basically what I'm saying here is that right now it's, the market trend is under pressure. So it's not a good time to go long on anything. As a matter of fact, it's a good time to look over your list, move your stop losses up protect some of the profit that you've built over the time. Right now, we are going to see some weakness in the market. So at least until we get a signal that's moved into an uptrend, a confirmed uptrend. Right now, it's an uptrend under pressure. You want to be lightening up. You want to be taking profits. That's the main thing right now, is to take profits right now, just because that is going to give you the best results. All right, thank you, Akbar. Let's take a look at several. Let's look at several stocks. Let's look at Nike first. Now, I am out of Nike because I was stopped out, and I'll show you exactly where I was stopped out here. Basically, what happened, of course, is that I was in Nike. I bought a full position at 169. We wrote it up, but then as it was coming down, I set my stop loss up right at that 40-day line, and I've been out of it basically for about 5 days. You can see I've stopped out at 165.32. So here's the thing. We're coming up on earnings in 3 days. Not a good time to buy this. If you're down more than, if coming into earnings, if you are down more than 10, if you're not up at least 10% coming into earnings, I think you should consider selling your position right now. So what I would do if I were holding, if I were holding Nike, and I was in Nike, is I would sell into earnings. So that's exactly what I would be doing here. I would be selling this into earnings. I think it's too much of a risk to take that this thing may pull back very severely on earnings. Now, it's likely to have good earnings, but the condition of the market right now is not as good. Now, I could be totally all wet on that, but my guess is with Nike, it's probably not the best time. It's just probably not the best time for Nike right now. But let's also look at ASAN. Let's see what that's looking like. ASAN. All right. And that has gotten okay. So this is computer software enterprise. This is unfortunately is not doing it very well. I want to go to the list of the strongest sectors in the economy, kind of review those as well. This is not looking good. It did get some support at the 200-day line, but this is just not looking good. If you're down more than 7% on this one, I would consider selling this one. Yeah, this is a sell. So really the really what I would consider doing here is if you're down more than 7%, consider selling. And here's why. You can always buy a stock back. That's always that's always an option. But right now we had a little bit of a rally in this, which is good. There is some strength. I would consider, if you're down more than 7% from where you bought this, I would consider selling this now, because if this is a weak rally. We've had a situation where the 10-day line has dropped tremendously. So right now, I think it's very, very it's a good time not to be in this issue, just because it's very difficult. It's a very difficult time to look at any stocks right now, because we have changed this into this. We have changed to this market trend under pressure, and this is key, because with the market trend under pressure, we just want to be very careful. So we definitely have a market trend under pressure. What this means is we want to reduce our exposures. We want to take our profits if we've got any, and we want to potentially cut our losses. We may be in a situation where if you're down more than 7% on your stock, consider at least selling half of it, possibly all of it. The reason being is that it looks as if we're going to get a little bit more downward pressure towards the end of the year. It's kind of like the weather. I think we're going to get a little bit more downward pressure. Can't tell exactly 100% of the time, but my guess is this is where it's going. So I would lighten up. I would make sure that I would kind of lock in my profits if I had any. If any of these stocks were coming into earnings, I would consider selling into earnings. And the reason that you want to do that is to protect your profit, of course. So generally just lighten up overall, because right now it's just a tough market. So let's take a look at the sectors of the market and see what's working and what's not working. Currently, the number one sector of the stock market, there's 197 different divisions in that, is the electronic semiconductor fabless. Now, unfortunately, this got killed today, so I would be a little bit leery about putting money to work here. I really, really would. Also, for some reason, retail department stores are holding up very, very well. But the best sector that I can find right now is the transportation truck sector. And I don't have anything in this, unfortunately. I'd like to get something here. Why? Because I do think that this is probably going to do the best. Now, can we find anything that looks really good? This is a problem in a market that's in a correction. It's just very, very hard to find anything really, really good. So I want to look at ArcBest, which seems to be one of the better companies in this group. It's still a little bit extended above the 91.33 buy point, but it is a cup with handle, and it has tested the 40-day line, which is very good. So, and we did have a lot of buying come in here. So I kind of want to bring this to your attention. This is the largest amount of volume. That's what this means. It's the largest amount of volume since the pivot. So there is money moving into this particular stock, it's not. I wouldn't say it's a total recommendation, but it's one that you might want to look on. It's called ARCBest, ARCB. That's the symbol on it. So that's one that I think might work in might work in this particular time. But there just isn't really a lot to buy. But right now, ARCBest, ARCB, trucking firm, should be on your watch list. I wouldn't buy it right now just because I just don't think this is a great market to buy anything. But this one right now is showing strength in a very weak market. So this is one you might want to look at. ARCBest Trucking, ARCB. That's the symbol on it. All right, let's look for Hans. Thank you, Hans. Happy Friday. Thanks for tuning in. So appreciate it. Let's look at Coinbase and PayPal, the two financial ones. We'll look at PayPal, PYPL, and just take a look at that one first. See if there's any life on this one. This has been having some real issues in terms of its trend. But as you can see, Hans, it's just been moving steadily down. Not what we want to see. It's just a tough market to trade right now. There's just been a lot of damage. As you can see, there we go. It's just going down. We've had the 200-day line, the 40-day line here has fallen below the 200-day line there. So this is what they call the death cross. It's not a good thing. It's not a good thing to have a market where it's doing this kind of action. This kind of action is not good. It's really not good. This kind of action is not good, and I think that we need to be very careful in terms of in terms of that. So not good action on not good action on PayPal. So if you're in PayPal right now, you probably need to probably reduce your position, or if you're down more than 7%, consider selling, because it will come back. You can definitely buy it back, but the capital damage right now with this stock may be a little bit too much. It may be a little bit too much for anybody really. So I'd consider selling this one. Let's look at Coinbase. I haven't been in Coinbase since the IPO. I was in the IPO just very briefly, basically in the first day. I was in Coinbase, but I haven't really been in it since. There we go. I haven't really been in this one since. Again, downward trend. This should be benefiting from Bitcoin, but it doesn't seem to be. Relative strength of 29. Just not a good place to buy it. It really hasn't been viable. This is the weekly chart. This kind of gives a view at a higher level. One of the things I do kind of want to show you that this is a profitable company, but it is it's had some issues. So let's look at the fundamentals on it. The sales growth has just been phenomenal. This is the sales growth here, and the profit growth has been phenomenal too. But the question is why is it going down? Well, who knows? But I do know one thing: it definitely is moving lower. There's no question about it. And the checklist is relatively weak. Let's look at the pattern recognition to see if we've had anything. Yeah, we're 41% below the pivot in basically 95 weeks. So it's given up pretty much all of its gain. Now, if we can see this thing move and break higher, then we might have something that we could buy. But right now, it's just not a good situation when it comes to coins. So it's just not looking. It's just not looking right, and it's just a general overall market. But coin is not a buy. No. So I think you just have to be kind of wait for this one possibly to turn. I think this one will turn, but coin right now just isn't a buy, and it's not something you really want to be in because it is pulling back. Now, eventually, probably in several weeks, it may bottom. That would be a great thing. But right now, it's just not a buy, unfortunately. All right. Let's see. Thank you, Jeets. Let's look at CUBI. I don't know what CUBI is. Hold on. CUBI. Right, Consumer Bancorp. Well, it's doing good, and it does have a blue dot. So, wow, this one might be one of the few. One of the few here. It's it's had some very nice action, nice fundamentals on it. Boy, the profits are up. I wonder why that's the case. They must be doing something. Oh, 20 Bank expects earnings. Okay, so they reported earnings, and the earnings were up. I can't really understand why this is a blue dot, but it is. It's got a relative strength of 99. Let's look at the checklist. It's 100% checklist. So you're definitely right, Jeet. This is definitely one that you should consider. Now, I'm probably not going to buy it, but this is not bad. It's off about 12% today. Weekly, it's down a little bit. Monthly, it's down. So it looks like it gave back some gains, a lot of gains. I don't know why. And year to date, it's up 233%. Wow, that's incredible. But it definitely looks like it gave back some gains today. Why is that the case? Well, it came above the buy point, 61.48. Then, unfortunately, it got some pressure and it's pulled back down to below the 21-day line. So, wow, that is not looking good. Unfortunately, a lot of people are selling this one. I can just tell by this little Easter egg there. So, boy, I don't know what the situation is with CUBI, which is Consumer Bancorp, but there's definitely people have, I guess, waited till earnings and then are selling it now that and I think the earnings were good. So it just shows you how tough this market has been the last week or two. It's just been tough to trade it. NPO. So I wouldn't recommend going into this one. I just recommend if you're down, you just got to stay out, and that's not necessarily the greatest thing. Now, here's a machinery company. I'm not familiar with this company. Inpro Industries. Not familiar with them. Symbol NPO. It is trading above the pivot, and it seems to be holding the pivot. That's very, very good. It pivoted when it went through earnings, basically. When it went through earnings, it did pivot. And it has been up. It's up almost 5% for the month. That's excellent. Quarterly up 22%. So this is definitely, there's somebody accumulating this. I don't know why they're accumulating this, but there is some accumulation going on. So this is a good thing. I'd be a little bit careful about buying here, but there is some accumulation going on. So this is definitely accumulation, and it has a very strong checklist. So this is checking some boxes here. This NPO, Inpro Industries. This is checking some very, very good boxes. So, I would say if you want to start moving into it, I wouldn't use it as a new buy, but maybe it's a good place to start to add. So it may be a good place to start to add. Jim, I'm riding Apple since 131. When should I consider selling? Thank you so much for this. Here's what I would do on this, and we've been talking about Apple a long time. I think that is fantastic that you've been in it since 131. That's really, you should pat yourself on the back. That's an excellent move, and as you can see, I've bought it several times. Basically, the 131. This was basically you bought it right here, back in, back in June, and boy, you made a good buy because this was the pivot. 137.07. So you bought right below the pivot. That's excellent. And then you just have held on to it. Here's what I would consider doing. We've added one more base. So what I would consider doing is I would consider putting a stop loss. Not when should you sell. Well, what I would do here is I would put a stop loss at 167.59. That's what I would do so that I could capture all of that profit because it may pull back. So what I would do instead of just outright selling it at market is I would consider set a stop loss at this 21-day line here, which is at 167.90. So 167.90. So basically, what this will do is this will protect your position in that you'll gain all of the you'll have all of the entry. You'll have all the profits from the entry at 131 all the way up to 167. So a tremendous run. But that's what I would do. I wouldn't sell it, just go out and sell it. You could do that. But I would put that stop loss right at the 21-day line, because that's where it's going to get support. If it gets support anywhere, it's going to be right there at the 167.90 stop. So that's where I would set my stop. That is a great move. Congratulations for being patient. You're more patient than I am. That's a good thing. You're more patient than I am. I think you've done great on that. All right, let's. Hans is asking about DocuSign. DocuSign, I want to buy DocuSign, but the chart hasn't been letting me, and that's just been tough, because it had these earnings, and this is incredible. This is sometimes what happens. It's totally buy on rumor, sell on news. They had some very good earnings here, but it dropped like out of the sky. Rating, relative strength rating on this is 10. What I think is happening with stocks like DocuSign is a lot of the big boys, a lot of the big companies are selling them into earnings. Why? Because they're trying to book their profits. They're trying to make sure that their profits, that they hold their profits, and that's why I think this is causing some of this selling to go on. Now, hopefully, after we get through, the year, at the end of the year, I think that you're going to start to see some strength pick up here. But you absolutely do not want to start buying the stock here, because we're very well below the 200-day line. So we just don't want to do that. We're well below that 200-day line. So I would be super careful here. I would not be a buyer here. But of course, if I owned it, that would be a different thing. But you would have had to own it really, really well, because basically at this level, it hasn't been back there since the mid-June, as you can see. That's when it pulled above. Mid-June was when it pulled above that. So if you were in mid-June and you've held on to it, this is why you need to sell the strength if you can. You would have given back all your profits. That's pretty bad, unfortunately, because this whole half year was a problem. See, and so that's kind of what the deal is with DocuSign. I just don't think you can go into DocuSign, because it has just been pulling back. Now it eventually will base, and then it will be a good time once again to buy it, because I still think it's a quality company. Now, ExxonMobil is this tale of two cities. ExxonMobil, for considering the market direction here, is doing fairly well. I mean, it's sort of in this uptrend, not a powerful one, but it's in this uptrend. It looks as if it is basically settling right here at the 200-day line. And it did pull back to that, but it definitely is getting support, as you can see. Getting support there. So that is indeed a good thing. Now, the play with Exxon, of course, it's a dividend play, because the cash flow is so strong. Look at that. It's $10.54. Now, of course, you're not going to get all that in dividends, but that is powerful when you consider everything. So this is sort of a dividend aristocrat. And what do I mean by that? Well, there are stocks that just have paid dividends forever, and ExxonMobil is definitely one of them. I mean, it's the original Standard Oil company, so they definitely have some very good things to say there. Now, would I consider buying at this level? Well, you know what? You could buy it at this level. It's got a very strong checklist. The only thing it is missing on is the EPS rating, and I really don't think that's as much of an issue, because this is one of the best, strongest income stocks out there. So this might not be a bad buy. Here's the thing: where you can measure. If you do own a stock like this, and you do receive dividends on it, make sure that you probably don't take the fractional shares, just take the cash on that one. It's going to be easier to deal with it in terms of figuring out how to handle it for tax reasons. But this is looking very, very good. Really like this stock, and I was talking a little bit, been talking about the oils, but now we seem to be moving into a time where the integrated oil companies are doing very much better than they were. So great stuff. All right, Roman, let's take a look at ARCB. I don't know what that is. With the biotech ARCB. Not sure. I want to take a look at ARKK, which is ArcInvest. This is ArcBest Corporation. Thank you very much. This is a great stock. Thank you, Roman. Thank you very much for bringing this one up. This is a good stock. There's not a lot of good stocks out there right now, but this company, ArcBest, is a trucking company. They do based in Fort Smith, Arkansas. You wouldn't think that a trucking company would be sexy, but this one is looking pretty sexy. On the weekly chart, it looks good. It also looks good on the daily chart. So this is probably the only one that I've seen last week that is viable right now. And that's I'm glad you're bringing this stock up, because I don't own it, but this is definitely on my short list because it's in the right area of the market. So ARCB is viable right now. And oops, that's stop loss there. Nope, that's I gotta get the right banners up here. But ArcBest is viable right now. And one of the things I want to show you in this and why this is good, this is a leading stock in a leading sector. So if we go back here and we look at the transportation truck sector and we click on that, we can definitely see how the entire sector is trading. Well, it looks like it's getting support at the 50-day line, and it's moving higher. So there's going to be more things happening in the trucking. That's good. This is one of the better stocks. If you look at it, it's at the top of the list. It's got a 99 relative strength. So this is looking overall very, very good. 100% checklist on this one too, by the way. And this is viable right now. This is really the only stock that I've seen today that's truly viable, and this is viable. It is in a consolidation pattern. It has gotten support off of the 40-day line. So this is looking good. So finally we have something. Of course, this isn't in technology, but it's good to have a stock that we can recommend, which is very, very good. All right, thank you very much. Super. Jim, your thoughts on the Nasdaq 100? Of course, the Nasdaq 100 is covered by this ETF called the QQQ, and I still have some QQQ, but I did reduce partially today. The Qs, I did partially reduce my number of shares in the QQQ. This has been in this buy zone. Really, I think that you can be in this as long as it's basically above 380, 382.78. So it's been in this buy zone. It's still in the buy zone, but here's the rule that you need to do with the QQQ, because the QQQ is kind of a special is kind of a special ETF in that there's kind of rules for buying it, and the rules are, if we are in a confirmed uptrend, then buy the QQQ 100%. Right? So if we are in a uptrend under pressure, where we are right now, buy the QQQ at 50%. So what do I mean by that? So basically what I mean by that is that the QQQ represents the Nasdaq 100, the 100 largest stocks in the Nasdaq, and that's where Microsoft lives. That's where Apple lives. All the big tech stocks are there. So if the market is in a confirmed uptrend, which it was yesterday, but it is not today, then you want to be 100% invested in the QQQ in the account that you're investing with, because the likelihood of it increasing in value is significant. Now, if as of today, it's pulled back to a market trend under pressure, it's a good idea to be 50% in and 50% out. That's exactly what I've done today. I had several positions in the QQQ in several accounts. I typically have it in several accounts. I sold my full position in 2 accounts in the QQQ, and I'm holding 2, waiting. Now, if we go back to a market trend under pressure, then I will sell all of the QQQ based on that. But right now, based on right now, it is not a good time to be buying the QQQ. The time to buy the QQQ is when the market trend moves from a market in correction to a confirmed uptrend. When that happens, that is the time to buy the QQQ. And the question is, how do you know when this has happened? How do you know when the direction of the market has changed? Well, one of the things you can do is you can watch my show, because on my show, on the slides, I almost always put a slide that indicates the general overall direction. And basically, this is kind of just like a traffic light. If it is a confirmed uptrend, it's green. If it's a market trend under pressure, yellow, and a market in correction, red. So that's kind of how you do the QQQ. All right, let's look at Samuel. XLV, this is a Spider Select. And, in this kind of market situation where we have, where we have so much pressure on the market, these Spider Selects are not a bad place to be, at least to hide out, because they tend to favor the best sectors. And I do agree with you. The Spider Healthcare is a good one, because this is a very defensive area of the market, and there will be movement into the healthcare stocks. The question is, with the Spider Select, you don't have to choose which one. You just choose the Spider Select, and they do the choosing for you based on the capitalization. But I definitely think this is worth looking at, because, at least for the time being, until we get a stronger market, because there will be a lot of seeking shelter in these kind of vehicles, like the Spider Select and some of the other ones. Consumer staples is the other one that also is very important right now, because that's where a lot of the funds are they're selling their tech, and they're buying these to kind of keep in the game, but yet still be fully invested. So that's how they're doing it. Strong checklist on this, even though it's an ETF 78 checklist. And let's kind of see where it's been. Okay, it's 2% above its pivot. Wow, that's good. So right now, and the pivot is right there. That's what they call the buy point. The pivot on it is $135.34. So it's definitely pivoted, so that's good. And it seems like there's a fair amount of volume. So not a bad place to hide out during the storm. Not a bad place to hide out at all. She is looking at AR. So this is Arturo Resources. This is an oil company. And let's pull this one up. Yeah. This has actually been holding up fairly well. I mean, the oils have been holding up fairly well. It's not quite as high a group as it used to be. I mean, of course, this is number 1 through number 5 in terms of strength for basically the last about 4 to 5 months. It is waning a little bit, but still, this is a very good stock. Of course, oil stocks and mining stocks, they typically depend very heavily on the price of raw materials. So right now, we have because of the inflation, that's the key, because of the inflation, we have a fairly outsized demand for oil and oil products. So the drillers, the U.S. drillers, should do well in this kind of environment. But they basically are interesting because they go after oil basically under some of the coal formations in West Virginia. So it's a very interesting company. Good numbers, good look on the chart. If you're in this one, I definitely wouldn't get out of it. Would I buy aggressively here? No, because it's extended. It's above that blue shading here. That's basically what they call this is the buy sell line. So we're above that, but does not look bad. It does not look bad at all, Jeet. I really appreciate you bringing that up. let's see if probably have a few more, and then probably going to end it here. But what do you think about? Let's see, Cowboy. Hey, thank you for following. By the way, what do you think about HBRA? Let's look at HBRA. I'm not familiar with that symbol. HBRA. Let's take a look. And that's not recognized, so I must be doing something wrong there. I don't know what the deal is. Okay. Let's see the chart. Absolutely. I would love to show you the chart, and I could definitely show you the chart on YouTube. But you have to go to YouTube, and you can do that by going to my profile, hitting the profile, clicking on the link, and you will be able to see it. So if you're not seeing the if you're not seeing it, I can't broadcast it on YouTube. I mean on TikTok, but I have it on YouTube. So if you want to go to that, it's very easy to do. All right, MDRX. Let's look at MDRX real quick. MDRX. Yeah, look at that. This is all scripts. This is a good one too. Very good. These are definitely the defensive names that you definitely should be looking at. So this is a very good suggestion here. This is where many of the much of the market is going to healthcare right now. It is defensive, but it's doing very, very well. All script healthcare solutions, and right at the buy point 1760. So this is looking possibly as it's viable. It's got a strong checklist at 89. It's in a good improving sector of the market. Now it indicates here that Allscripts is in the computer software medical, which I suppose it is, but it's really a service. I know a little bit about the company, and so I really don't know if it's correctly classified here, but it does look good. I mean, it's up 6% today weekly. It's up over 5%, so it's been at the top of its run here. Monthly it's up, quarterly it's up, yearly it's up, but mainly it's made almost most of its move here in the last quarter in 2021. So I think this is viable. I actually believe this one is viable. So I'd like to kind of put it out there, and I'm gonna actually look at it here. MRDX, and this is one I do kind of consider viable. I do consider this viable based on what I'm seeing right now. So, oops, I put the wrong one. I should have put MRDX. Yeah, there we go. MRDX. I think MRDX is viable right now. I think it's viable right now. And I also think that ArcBest, ARCB, is viable. That's, of course, the trucking firm, and that's also viable. So those are two that are looking very good. Now, I want to jump over to another thing that I think a lot of people are interested in, and this is Kathy Wood's ARK Invest, ARKK. That's the symbol for it. And I want to look at this because their biggest holdings is Tesla. Tesla did rally slightly today, but Tesla is not viable right now. It needs to base out. And I want to kind of like let's take a look at the chart. Now, right now, ARK Invest is not viable. It is below the 200-day moving average. It's below the 21-day. It's below the 10-day. But it does look like it might possibly be trading up. Right now, you can't buy it. And I want to reiterate this. This is what's happening in the market right now, is that we're seeing this movement out of tech right now. A lot of profit taking out of tech and into things like consumer staples and things like that. Also want to take a look at the chart of kind of one of the ultimate, stay-at-home stocks is P&G, of course. They sell soap. I mean, how exciting is that? But look at this chart. This shows you, and it's right out of the buy zone, it shows you this kind of, in the last few days, there's just a lot of malaise. I think that, we're looking at this potential inflation, and it's not looking good. So these are the kind of stocks right now, the highly defensive names. This is where you ought to be looking for stuff. Coca-Cola, Procter and Gamble, or you can just stay in cash, or you can do as I'm doing, and that is basically doing these bear trades, these bear put or bear call spreads that do well as the stock moves lower. All right. Okay, we're almost out of time, but let's look to see. All right, IBM. That's interesting. I haven't looked. I don't think I have bought IBM in 30 years. If you can believe it. I don't think I've bought IBM in 30 years, but it is turning up. Wow, this is interesting. Okay, well, thank you for that suggestion. I really appreciate it. We have traded, IBM traded below the 200-day line, so that's not looking good. This is what they call a death thrust, but it looks like it may have reversed, and that is the reversal there. So it's on a consolidation base. So the bottom of that consolidation, let's see if we can get it, is 152.84. So right now, I'm sorry, that's the pivot. That's up here. Excuse me, I'm giving you the wrong information. The bottom of the pivot. There we go. The bottom of the pivot is 114.75. There we go. It's 114.75. We definitely had a bounce off of that. So this might be buyable. It's got a good amount of time until earnings. You don't want to buy a week into earnings. You always want to be careful about that. 38 days to earnings. Let's take a look. And the checklist just isn't there. It's 44%. So I would like to buy this. I would so like to buy IBM, but I think for right now, what we've got to do, and this is not easy, is I think we have to watch list IBM for now. So that's kind of where I'm looking at, with IBM. So right now, it's trading below the 200-day line. You never want to buy below the 200-day line. So right now, I think the only thing we can do really with IBM is to do a watch list. Okay, well, thank you, everybody. I hope everyone is going to have a very nice weekend. By the way, if you're interested in those spread trades, the one I put out today, super easy to take a look at, and just go to just go to http://bit.ly/DTF0015, and that is for the spread trade that is for the bear trade on that is for the bear trade on Square, which is now called Block. So if you're interested in this trade and you want to take a look at it, very easy to do. Just go to this address, http://bit.ly/DTF0015. Also, if you want to get on the action trade alerts, I'm going to probably be putting out a watch list on Saturday. Hopefully everybody will get to see that. You got to be signed up for the free action trade alerts, and that's at www.dallastradingfloor.com. And if you are looking on TikTok, super easy to do. Just go to my profile and first and last name, and we'll get you on that list for the watch list that's probably coming out on tomorrow, Saturday. So until Monday at 3:45, everybody, I hope everyone is having a great weekend. By the way, I just want to say, please like this. Get the bigger one too, because I have the bigger. There we go. Please smash the like button. It's so important. That gets us out to more people. We're well over 100,000 people on TikTok, and we're moving up fast on some of the other platforms. But by hitting that like button and subscribing, it really helps us get out to a lot more people. So until Monday at 3:45, happy trading, everybody. Stay safe, and we're gonna make some money even if the market pulls back.